Hello, and welcome to our March 2025 NABBW Zoom Financial Podcast, an hour where our goal is to keep you abreast of financial topics and leave you feeling smarter about managing your money. As always, I'm joined by our esteemed financial expert, Pamela J. Sams, CRPC, who is NABBW's Retirement Planning Associate and a nationally recognized financial guru. I don't know if you like the word guru, Pam, but well,
Yeah,
what I came
that's
up with.
fine. Yeah.
With all of the news being generated lately by activities in Washington, D.C., we know that Wall Street is on full alert. And if you're like me, you're starting to feel like you're walking on thin ice. Maybe you've joined a few of my friends who tell me they've stopped watching the nightly news or reading the Wall Street Journal in favor of less stressful activities like watching TV game shows like Wheel of Fortune or Jeopardy. I mean, this is true. They have. In other words, my friends have decided that it's less stressful to you watching other people deal with money decisions that have no direct impact on them or their family, or which do not involve threatened actions that could be taken in Washington and would likely be upsetting the balance of world trade, making the cost of living increase, especially for food, and start tipping us into a recession. Not to mention that apparently the real threat of losing your job with no notice and no good cause. There's a guy in Illinois, in Iowa, who was a park ranger. I don't know if he made national news with it or
Mm-hmm.
not, but he's got his job back. But a lot of people I don't think have managed to get their
Mm-hmm.
jobs back, and that's just awful. So I understand all the stress of this. But so now that you know that we've titled tonight's discussion "Navigating Uncertainty in a Volatile Market," and that our normal format is for me to pose questions to Pam, which are designed to allow us to discuss tonight's helpful points. I don't want to keep you waiting too long for us to get to the good stuff. But before we begin, I have to do a little bit of housekeeping, and I realize I have to get my phone to get the disclaimer going. Okay. I am Ann Holmes, your moderator and the baby boomer in chief of the National Association of Baby Boomer Women, an organization that is totally dedicated to educating and empowering women at midlife and beyond. And with me is the multiply credentialed and highly qualified Pamela J. Sams, BFA, CRPC, MBA, and trusted advisor to professional women. Pam is a chartered retirement planning counselor and NABBW's retirement planning associate, an expert in personal finance. Pam is president of Jackson Sams Wealth Strategies in Ashburn, Virginia. Together, we bring you a monthly discussion related to money and financial planning. Pam also wants you to be aware of this.
Securities and investment advisory services offered through Osaic Wealth Incorporated, member FINRA SIPC. Osaic Wealth is separately owned, and other entities and/or marketing names, products, or services referenced here are independent of Osaic Wealth.
All right, we're now officially ready to begin. So thanks for joining us again, Pam, and I'm glad that I
Yeah.
got a little levity going here.
Yeah. Thank you very much for that introduction. I think you added a lot more sensational guru, that sort of thing to it. So,
Well,
so I have to live up to the hype.
yeah, but I keep reading more and more about you in national situations. So you're getting to be a, you know, much more credentialed and big name than when you and I started all those years
Yeah,
ago. So you
exactly.
deserve it. All right. So Ham, as I was mentioning a minute ago, we're only a
Hmm.
quarter of the way through 2025, but already we're finding this to be a very financially challenging year.
Hmm.
So let's get right to it. Your first checklist question is, what does market volatility really mean, and why does it happen so frequently? So let's start our discussion there.
Yeah, I think that's where, a lot of people end up seeing, the ups and downs of the market, which basically equates to volatility. But it's completely normal. They say that the market was what they call overpriced. At some point, you have corrections, so it is
Mhm.
completely normal in terms of volatility. Now, it causes things do happen that cause the fluctuation as well. Of course, there's economic data, there's headline news, as you know, interest rates, of course, global events as well, and just the sheer point that investors are emotional when it comes to that. So they see something, and then next thing you know, there's volatility, there's sell-offs. You've probably seen a lot of that over the past several weeks just by what's been going on in the headlines with tariffs and things like that.
Hmm.
So that upsets people. But think of it like turbulence on a flight. It's
Okay.
really, it feels bumpy, but the plane is still moving forward. So that you have
Hmm.
to kind of think of it that way. We're in a kind of a turbulent, bumpy type of ride, but we know in terms of the overall market, things are still moving forward. So that's what it really means is that, there's going to be some bumps in the road. It's a little bit of a roller coaster ride. Hopefully you won't lose your lunch, but just know that it is a normal course correction for market volatility.
All right. Now, and that makes sense. But and you mentioned emotions. So let's get to
Mhm.
your second question. How can investors manage their emotion during these turbulent markets?
Yeah, that's a good question. Acknowledge that, fear is normal, but emotional decisions can derail what you're currently doing. So, as a behavioral financial advisor as well, is trying to keep the emotions out of the longer term, these emotional decisions for the longer term. Stick to the game plan. That's why I always tell
Hmm.
my clients, stick to the game plan if you do have one. If you don't, now is a good time to create one, of course. Um, and you tune out the noise, the headlines that are really meant to stir up emotions and not guide you in smart decisions. They're like if you look at these news cycles, that's what they do is try to stir up a little bit of controversy because they want, the advertisers and all of that. So it becomes a little sensational. So
Hmm.
don't get caught up in the headlines of it. And that's what it's meant to do is kind of stir up emotions. If you ever look at the financial publications and you see the traders with their heads down and all that, it's to create some type of emotion from people, but to try to tune that noise out, I always say, there's a macro economy that's going on, and there's your own personal micro economy. So whatever you can control in terms of sticking to your own plan and not make the emotional decisions, that's what you have to try to do. Try to keep the fear as at a minimum if you can.
Okay. So, given that, and that sounds like excellent advice, is now a good time to invest, or should people wait until things settle down, the turbulence
Yeah.
settles down?
Yeah. The timing in the market is nearly impossible, even for professionals. I always say it's time. It's not time in the market, it's time in the market.
Ah,
Historically, long-term investors have been rewarded for staying invested for the long term throughout. Um, and I was, my thing is, and if you ever talk to any of my clients, they'll always say what I tell them about it is that the stock market is the only place where things go on sale and people run away. That this could be an opportunity to buy more
hmm,
into it and then also buy things that are on sale now. So if you had a
hmm,
particular stock or mutual fund or something that you wanted to invest in and it was higher, now it's lower. We know all ships rise, at some point. So
hmm.
when you get an upturn in the market, you've bought more shares at a cheaper price. So things are on sale right now with that. Think of
Hmm.
it like, planting a tree. So the best time would be 20 years ago, not
Hmm.
and the second best time would of course be today. So if you
Right.
have a little bit of a longer time horizon to do it, you could get some things that are on sale. So think about it that way. Think about it like a new pair of shoes. It's like it's on sale. It's on a discount. Stock market's at a
Hmm.
discount. It could be a good time to invest.
All right. So, point number four on your list is what role does diversification play when markets are unpredictable?
Yeah, now that's kind of the key is really diversification spreads your risk. Think about it like having an umbrella or a sunscreen or jacket in your bag just in case, something happens at some point. So
Hmm.
diversification is similar. It's not going to prevent any losses, of course, but it is a cushion to the impact. So if one particular investment is going up and one's going down, we know you have a little bit of equilibrium there. So that's what diversity is supposed to do, is spread the risk around. There are different asset classes that respond differently to market events. If you have consumer, what they call consumer staples, which are things that people normally would buy regardless of what happens with the market. You still need toothpaste and toilet paper and paper towels and all of that.
Hmm.
Those
Right.
could be things that would be, relatively, still in favor versus going down. So you want to look at things that may not be correlated with the market, or things that, regardless of what happened, people will still need those resources with that. So that's what diversification does, is how to, not going to take off all the risk off the table, but it does, like I said, cushion the impact a little bit more.
All right. Point number 5. How can I tell if my current investment strategy can handle the market swings?
That's a good question to ask yourself. It's like, if you're losing sleep over it, then and the answer is yes, then that means your risk tolerance may not be matching what your
Hmm.
portfolio is. And that's kind of my whole motto, is to help you sleep well at night. Is making sure you have a good strategy that is going to be built to keep volatility in mind. So there's no surprises, and that it is expected, especially if you
Hmm.
have, like I said, a longer time horizon. There's going to be a little bit of ebb and flow as you go through. So you want to rebalance regularly to keep your plan on track. But if it's definitely keeping you up, that means it's not in alignment with your overall investment strategy, because it's too much. So you may be taking on a little bit more risk than you would like, if it is. So if you see the big swings, the big market swings, that means you may be a little bit more aggressive in your stance with your investment strategy, and maybe you cannot stomach being more aggressive. Then you may want to look at lessening into a moderate conservative type portfolio, depending, of course, where your targets are for your goals. But that's kind of how you're in alignment, is that if it's too much for you to bear, then you may want to reassess. Rebalancing regularly, and then re it's a rebalance and then reoptimize. So reoptimize is means, do I still stay in these same asset classes that I had before in my investment strategy? And then rebalance is basically putting everything back to its original portfolio mix from the beginning. But you want to do that regularly, to make sure you're still in alignment with your investment strategy.
Excellent. And I want to let our audience know that Pam is a big believer in sleep well at night, SWAN. That's why you see the swan background
Mhm.
in
Yes.
in behind her there. That's the swan is significant, and that's
Yes.
something that you really believe in. So
Hmm.
I want to point that out to our audience. So
Hmm.
um, just because it's sometimes these kind of things make things easier to remember, these
Yes.
little acronyms like sleep
Exactly.
well at night, spell swan.
Hmm.
So point number 6, what's the biggest mistake people make during market downturns?
Yeah, what I see a lot is what they call panic selling. You when you're selling low, that kind of the opposite, of what you're supposed to do. Selling low and then locking in losses, and that makes recovery a lot harder. Until you actually make and execute a trade, it's basically all paper loss. You'll see your
Hmm.
statement and you'll go, okay, I don't feel great about it. Everything's red, or the arrows are down, or whatever, but until you've actually executed a trade, those are paper losses. So panic selling is what I see a lot of times, is selling it. I can't take it anymore. I got to get out of here. That's what happens. And then, market recoveries happen faster than you think. When the March of 2020, we all know where we were. It's kind of one of
Hmm.
those days, one of those time periods that where were you March 2020? When the markets fell, the bottom fell out, is that it really only took several months. By September of that year, things started to improve. with that. So the markets can recover very fast. So if you locked in those losses and sold during that time period, you weren't there for the recovery. So you missed those days that went up after after March of 2020. So you want to use history at this time period. You know, downturns are only temporary, and growth over time is more consistent. They always say, you know, if you look at a chart, it's kind of an Epson chart, but if you look at a chart, any asset class in any given year could be in favor, and then the next year it could be out of favor. But
Hmm.
if you sold it, then you're not there for the recovery. Even if you're out of the market for, I think it was like 20 days, it has significant impact on your rates of return. Just missing 20 days in an upswing on a market cycle could happen with that. So no panic selling. That's the mistake I see a lot of people doing, is that I just can't stomach the roller coaster ride anymore. I need to get out of it. Unfortunately, I've had quite a few clients in this environment that unfortunately I could not talk them off the ledge. And some panic selling happened. And you know, I had to, you know, to make sure that was taken care of. But it don't try not to be in that situation
Hmm.
if you can help it, because you've missed out on some of the recovery if you end up locking in those losses.
All right. So I think the next question I have is goes right along with that, and especially because our audience is um, baby boomer age, so
Hmm.
we're starting to get into the retirement years, and so the question here is, should I be making changes to my retirement plan during volatile times?
Yeah. Now here you want to, you know, kind of avoid again kind of knee-jerk reactions. So you
Hmm.
want to look at your retirement plan as a kind of that long-term blueprint. So it's not a like a day trading type account. You want to revisit, of course, your allocation, and then of course your withdrawal strategy. Making sure you have enough cash reserves, and not just your core investments. So having probably a little bit more cash than you normally would, especially if retirement is fairly imminent, that
Hmm.
is tomorrow or is within
Right.
this, 12-month, 14-month period, then you want to take a look at perhaps making some changes. For those really close to retirement, having a bucket strategy. I think I've talked about bucket strategy before. Um, Having different types of monies and different types of buckets. So kind of the first two or three buckets may be a little bit more conservative during these market volatilities. So more cash type of investments, CDs, things like that, that could more protection of principal versus having it exposed to the market could provide a little bit more peace of mind if you're really close to retirement. So really working with your financial professional to develop an effective withdrawal strategy could help while you're making changes to your retirement plan during this time period. Again, you don't want to do any panic selling or locking any losses. So reallocating may be a better solution. But if you have some strategy where you have that bucket, maybe the first two or three buckets, those are usually 5-year increments. So maybe like the
Hmm.
first 5 to 10 years, you have something a little bit more conservative. Then you don't have to worry about too much about the market volatility because you know you have some cash on hand that
Right.
would help you pay for your day-to-day expenses.
All right. Well, I started out talking about global events and how they're frightening people. So I like this question that you've included here. How do global events like elections, wars, or economic shifts really impact a person's portfolio?
Yeah, just like, you know, we had mentioned earlier before, markets react very quickly.
Hmm.
But they're all not always rational either, you
Right,
know,
right, right.
to news headlines. So one
Hmm.
thing, you know, you see one blip on the news headline, next thing it's always correlation between what you read on your kind of your smartphone and then what you see on your stock app. You know, it's like, okay,
Hmm.
they're both hand in hand. You like I do that every probably should relax at night, but sometimes when I'm looking, I'll say, okay, what does the news cycle look like for the day? And then I'll check the Dow futures and see what the next day is probably going to look like. And that's basically because markets react very quickly. Like I said, not very rational sometimes, but it happens. So this short-term volatility really doesn't always reflect those long-term fundamentals. It was just kind of a knee-jerk reaction again. Something happened on a news cycle, and then next thing there's market volatility the next day. But the thing is, of course, staying diversified and focused for
Hmm.
your own personal goals really matters, and not reacting to those, to the news or the news cycle, because it's going to happen, especially, in the environment we're in right now. From day to day, we're not sure, what direction policy is going. So market reaction is more prominent these days that we see that could have an impact on a portfolio. Again, we want to make sure you are in alignment with your risk tolerance and also diversify and then focusing on your own personal macro economy. Um, I'm sorry, microeconomy. So
Hmm.
you know what you need to be focusing on. You could only control the things you are only in charge of the things you can control. Everything else
Hmm.
outside is stuff that you can't control. So try to focus on the things that you can.
Okay. So are there some safe moves that I can make right now without derailing my long-term goals? And if so, what are they?
hmm So really, again, I always come back to it. Building and bolstering your emergency fund. That's always
Hmm.
key. Cash is always king in
Right.
these instances. So having that, again, it wouldn't be a phone call unless we mentioned the B word, which is budget.
Hmm.
So checking your budget and see if there's any spending leaks, because a lot of times we could be overspending. There could be leaks in our budget. And you want to stay invested, reviewing your asset allocation, rebalancing if you do need it, reducing your debt where possible, especially high interest debt. Those are kind of some safe moves that you can make again with your own personal situation. Um, and so you're not too reactive on what happens from the outside because you have a good cash reserve, you have a good budget, you're invested and you're properly allocated, and you have, less debt than you should have, and everything should be in your own little micro economy be okay for those moves.
Okay. Point number 10, how can a financial professional help during periods of uncertainty? I can imagine one way in the old days would be have all your clients on speed dial so you can call them up and say, do not sell.
Yes, do not sell. But really having international professionals really kind of having an anchor with those emotions turn high,
Hmm.
like I said before, especially as a behavioral financial advisor, it's like, okay, I have to talk people off the ledge, and then we have to kind of go back to the basics on making sure their emotions aren't running too high and reacting because, in the behavioral or the kind of the neuroscience of it, we basically react before we actually think, the
Hmm.
prefrontal cortex type of situation. It's that fight or flight response. It's the same
Hmm.
thing when we see what's going on in the stock market. It's like, oh, I gotta get out of here. It's the same thing like back in the day where there were saber-tooth tigers. So it's the same thing. We don't know the
Hmm.
difference between what's the market volatility and a saber-tooth tiger to our brains.
Right.
So that financial professional kind of keeps you anchored and put your emotions in check so they won't run high. But also, they allow you to really zoom in on that big picture, because if we're in it sometimes, we really get inundated with the day to day and the minutia. So the financial professional kind of looks at that overall big picture, what your goals are long term, not
Hmm.
just what today's headlines are going to tell you. And then it's all about, the strategy, perspective, holding you accountable so you don't navigate alone. Because if you're left to your own devices, you could be panic selling, you could be doing some things that may not be in your best interest. So having a partner in that instance, so you can navigate it together, gives you a little bit more leeway versus kind of being on your own, trying to figure things out by
Hmm.
yourself.
Right. Well, thank you. As usual, you've packed a lot of solid content and great advice into this past half hour. We still have a little bit more time, so I'm going to ask a final question uh,
Mhm.
of you, and it's kind of a got a big setup for it. I want you to talk a little bit about of our federal entitlement programs, specifically Social Security and
Mhm.
Medicare, as they have the potential to personally impact all of us. And the experts point out that Social Security and Medicare are the largest federal government programs. Actuaries project that the trust funds that power both Social Security and Medicare will become insolvent, as we've talked about before. It's
Mhm.
not news,
Yeah.
it's not brand new news at all. But now it seems like it's coming closer because they're saying they could become insolvent in the 2030s unless funding is
Mhm.
increased or other changes are made. And as I understand it, last May, the trustees released a report projecting that Social Security's trust fund will not be solvent as of 2035, while Medicare's hospital insurance trust fund will be depleted in the following year, 2036. Now, of course,
Mhm.
with us boomers starting to retire and our country's older generations being blessed to be living longer, combined with the fact that too many of the folks currently receiving federal funding are relying solely on these programs for income. You're always
Yeah.
telling us don't rely only on that, but
Mhm.
too many people
Yeah.
still are. So we're looking at a recipe for disaster, I think, unless we can find and begin employing some other form of funding. But I don't really know. My personal understanding is that if the federal trust funds run dry, the programs would then only be funded by annual payroll taxes.
Mhm.
And my understanding, and I'm not a financial professional, but my understanding is that not only would the current recipients see lower benefits, but our younger workers whose current payroll deductions are funding our monthly deposits into the, the the part that the fund that pays us our Social Security and Medicare, they would potentially retire only to find there is no SSI or Medicare still left for them. And maybe I'm wrong, so I'm asking you. I don't have the answer for
Mhm.
this, but I'm just saying, Pam, beyond
Yeah.
advising our employed listeners whose payroll deductions automatically force them into contributing to the Fed's Social Security and Medicare trust funds via
Mhm.
their payroll deductions, you know that we also advise them to personally fund their future
Mhm.
retirement by living on a budget. And you said it already before me, but we have to talk about a budget
Yeah.
in every one of our
Yeah.
calls. It's required.
Uh-huh.
But so living on a budget where one of the budget's line items is savings account. But I'm curious as to whether you have any other recommendations.
Mhm. Yeah. Yeah, as we know, Social Security is definitely facing some funding challenges. But it's not bankrupt, that's the
Mm-hmm.
thing. It's that even with 2030 being insolvent, worst case projections that I've seen is that there will be reduction of benefits. Those who are already receiving benefits, maybe 75 to 80% of what's promised, but not zero with that. Now we
Mm-hmm.
know, the challenges that are going on right now with it, but government has made adjustments before, so
Mm-hmm.
we're not sure. But that's kind of worst case scenario that I've seen in terms of kind of the Social Security with that. So, you know, again, it was never meant to be the sole source of retirement income. So, of course, having that three-legged stool, I think I've mentioned it before,
Mm-hmm.
the Social Security, the personal savings, and then probably a retirement plan through an employer
Right.
is really kind of your best situation. So, without having or relying on Social Security, especially with some younger workers, strengthening those other two is really important right now. Now, those who are really relying on Social Security, that is the kind of the challenge. Can they function on, 75 to 80% of what they already had? So, that's kind of to be determined type of situation on what's going to happen down the road with some of these entitlement programs. Same thing with Medicare. Keep an eye on it, of course, don't panic, but it is also under pressure, as we know, and change is going to be
Mm-hmm.
likely with future generations, more gradually. Rising healthcare costs, is one of the things you have to deal with. And so I think structurally, and don't quote me, but structurally, I think, there's going to be some, breaking points when it comes to long-term care, supplemental coverage, Medicare overall, because, cutting out entitlement programs like Social Security and Medicare, you have a vulnerable group of people that, what happens without these things?
Hmm.
You know, do we reinvent something new in order to kind of take care of it? So instead of worrying what, Congress is going to do, really working on what you need to know now, and then stress test any game plans or plans that you may have for yourself. Again, try to control what you can with that. But yeah, it's going to be a wait and see type of situation that's going to happen with some of these entitlement programs with the administration.
Hmm. Well, thanks, Pam. As usual, it's great talking to you, and thank you for being my guest and for sharing these excellent answers and financial recommendations. I look forward to our next discussion, which I don't know what the topic will be, but it will be, assuming we stick to our plan of the fourth Thursday, that would be the 24th of April. And meanwhile, before that, and I have a couple of summaries that I want to get to before we close, but is there anything else that you want to say before we wrap up the call?
Yeah, I mean, I think, everybody's emotions are high right now and very stressful time. We're ending March, which would be first quarter of this year. So,
Hmm.
first quarter is always good, kind of revisit what happened to this 90 days and how can I affect my own personal situation? What do I need to do for the next quarter? We have to kind of go every in 90-day increments these days.
Hmm. Right.
Of course, looking at the big picture, but what do I need to do in the next 90 days in order to move myself forward financially? And then try to, keep your emotions in check as much as you can. I know it's a stressful time. I always say, kind of when emotions run high, try to do things, that as a financial advisor, I still into overall wellness. So
Hmm.
meditation and, breathing and things like that to try to keep your emotions and yourself a little less stressed. Massages, things like that.
Hmm.
I give recommendations outside of just finances as well,
Okay. Well,
but
but
those
that's
are some things to really kind of think about is
hmm.
that if you feel that you are in a situation where I try to from even with myself try to stay off of these news cycles because it's just too much going on with that, so I try to filter what I can, of course, for my own knowledge but also so I can be knowledgeable for my clients. But if you look at it this stuff all the time, it'll stress you out. So try not to meditate, take some breaths, light a candle,
Hmm.
have some relaxation time so you're not your shoulders all up all the time and you're on
Hmm.
defensive because that's not a good place either. And then if you don't make really good decisions, both
Right.
personal and financial, if you're in that particular state.
Okay. Excellent, wonderful answer there. So thank you
Mhm.
for that. Now,
Mhm.
audience, thanks for joining us for this great Zoom call with Pamela Sams. If you have questions after the call, feel free to email them to Pam at pamela@jacksonsams.com. I always spell that. So Pamela at JACKSONSAMS.com. There's no hyphen or anything. It's Jackson
Mhm.
Sams, one word. Or go to our website at www.jacksonsams.com. Now, for more on the National Association of Baby Boomer Women, check out our website at www.nabbw.com or our Facebook page at facebook.com/NABBW. And finally, I want to end tonight's call by inviting you to check out another highly beneficial website. I've talked a little bit about it before, but I'm going to say a little bit more about it because this site just keeps growing and it's amazing how much content is in it. This is the site that I've talked about called babyboomer.org, BABYBOOMER.org, which aims to become your ultimate guide to baby boomer news, information, and community. And in the interest of full disclosure, I'm going to tell you that I am one of the three co-founders of the site. So I have some personal interest in it, but I'm not the only one providing content. This site is huge, currently has over 11,000 articles and over 142,000 podcasts, not to mention over a dozen online courses, all of which are provided by 775 member contributors. And this content is updated daily, so every time you visit, you will have the opportunity to find something new. And plus, there are activities you can place and buy from classified ads. You can post memorials to family and beloved pets, and even join a membership community. Also, we are going to be adding a handful of regular columnists. And I want to tell about the columnists because this might be someone listening here who might be interested to be contributing a regular column on a topic of personal interest. So if you go check out the site, don't be daunted by the size of it. You'll find thousands of pages of content, but a lot of it is free. And we also offer some very decent member benefits. So in closing, I want to thank you for joining us tonight for this great discussion with Pam Sams. And I do hope you'll go check out each of the 3 sites I mentioned. And thanks everyone for joining us tonight.
Yeah, thank you.
Thank you. Good night.
Good night.